What's up YouTube, it's Louis here. I hope you're all well. I'm finally back. So sorry, I've just been so busy today. Had multiple lessons, one after the other, 3 mentorship sessions. I do actually still have 2 available slots, so get back to me ASAP if you want to take those last 2 slots with the mentorship. The prices will be increasing. The influx of students has been absolutely ridiculous. Yes, we still have 2 students, and yes, I'm keeping it on the previous price. So these final 2 students are going to get it at $650. Then it's going to move back to what it actually was, $750. So not the biggest of increases, it's just what it was. It's been discounted for many months, and yeah, because just the influx has been increasing so much, I'm going to stop it. But the final 2 slots will still be at the current price. And yeah, for more details, head over to my Twitter, Louis_crypto. It's the second link under this video. Please like this video. Of course, comment if you do find value. And of course, subscribe. So what's going on with Bitcoin? Well, wow, we finally actually broke out of this ascending triangle, completely invalidating what the bears were saying the day prior. So everyone was looking at this CPI data. Basically, while we were down here, it looked like we're going to make this lower low. All the bears were saying, watch out for the CPI data. We're going to dump. The forecast, well, I think the forecast was greater, or I forgot what it was, but there was no movement basically with the data. And that's why we started pumping. It wasn't what it was expecting, so did the complete opposite of what we were anticipating. So of course that's why we've seen this unexpected run up, because yeah, again, it's a fundamental news event that we cannot control, so we don't know what the outcome is going to be. So rather than trying to guess what the outcome is, rather just react. And what we can see with the daily close, which is confirmation, we must wait for confirmation. This is why every day on the channel I'm showing you the daily time frame, and we go day by day. So wait till the daily close. That's why I say if we're closing a daily candle above this, we're going up. If we're closing a daily candle below this, we're going down, because we want to wait for the confirmation. For example, look at this, we're wicking currently, but earlier on, a few hours ago, we were all the way up here at 24,900. A big brick wall, 25k, big psychological level, big resistance. So we must hold these lows we created. So that's why I've been drawing out the lows for you. So this orange box here, this is what you want to stay above. You can see we load out here exactly on the 20. I had this green line previously on the chart, I just deleted it today, but this is exactly where we found support. This was a green line I had in a mentorship session from last week, or earlier on in the week, and I said or it might have been last week, sorry guys, I'm just 1 2 3 4 5 6 7 yeah, 8 days ago, so over a week ago, when we were coming down, I said, okay, look to the left, we have this green line, sorry, my apologies, we have this green line lining up with this green wick over here, lining up previously with this resistance support, resistance there with that green body, green wick, red wick, with the close and the 20 EMA. So much confluence in this area, if you understand what I mean, guys. So many different things agreeing with this area, saying that this should be an area where we do get a reaction from, because that's where the 20 is, and it is, again, previous resistance. We broke above it, it should now become support. You see, prior we broke above it, went back under. So when we go above it now, we should hold it. So that's your higher low as well. So that's a higher low, we need to see a higher high. We've done that today with the wicks, and if we again close above 23.9, then you've got another close with the bodies higher than the last body, so higher than this one. This is the last high basically. So yesterday we've continued today's, because we actually broke out this ascending triangle, validating this 26.6k target. So yeah, that's what we should anticipate, as long as we're above this purple line. If we're losing this purple line, that means in the short term this is not happening. So that means if we lose this purple line, that is not happening. We're heading back to this low. We're going to retrace back to this low. If it can hold, we'll have another attempt at this, and if we can break above this purple line and confirm its support again, then we'll continue up finally. So I'm telling you that you can actually invalidate it for now. As long as you can hold this, it'll give you another chance to try and validate it again, but you might not even, you might just double top here and continue. So this is why we're preparing you for all scenarios, and you react. Louis says we might be going down, but he also might be saying we're going up. So those people that are a bit confused or new to trading and don't understand, why is this Louis guy, he keeps saying if we go down, if we go up. He's not telling me we are going up. He's not telling me we are going down. I'm going to gather all the data, and you have to come to your own conclusions. What has more confirmations? What has more agreements? The bears or the bulls, basically? So the most obvious thing that even a dummy that's just come into this is going to say, we're in a downtrend. So That's what the majority are going to keep saying. We're in a downtrend, we're in a downtrend, we're in a downtrend. And every time we go up, they're going to say, but we're in a downtrend. How do you flip a bearish chart bullish? You have to start going up against the highs. But each time you're going to get the bear saying, you're still lower than this. If we're coming up to it, you're still lower than this. Then we break it. Then they'll go, oh, but you're still lower than this. And then we'll break it. And then they'll say, oh, but you're still lower than this. Do you see what I mean? So every time we do go up, the bears are always going to be here. They're going to be constantly be here. As long as we're below the all-time high, they're going to constantly be here and berate us and say, no, it's still a lower high. We're going to go lower. And then what I personally say to the bears is, where is the lower low then? I'm going to show you multiple times on this chart in the last 2 months. And guys, there is 1 week left until it's 2 months since the bottom. That means that in 1 week, it will be 2 months straight of an uptrend. So since June the 18th, in 1 week, it will be 2 months straight of an uptrend. So you can literally not say for the last 2 months we've been bearish. You have to say we're in fact bullish since the 18th of June. But the easy thing to say is no, we're bearish, because that's what the crowd are going to do. I'm always against the crowd. So just like up here at 48k, and I know there's the guy in the comment that always says Louis always talks about the past, but I'm proving stuff in the past. I have to look at the old data to prove to you my points, basically. I have to show you the proof in the pudding. Do you not want the proof in the pudding? I think you do. So I have to go to the past because that is the data, that is the proof. So here, we broke above this high because I was telling everyone if we break this high, we're going to go up higher. But once we actually had done it, I told everyone we've been going up for 16 days straight. This is a bit too, getting a bit too little parabolic over here. We had this parabolic curve getting a little bit too parabolic. We need to hold this low because if we're closing below this, then we're definitely losing this. We're going to 25.8k and then we went down to 25.4k. And over here, once we lost this low, just like over here, I was saying once we lose this low, you see this was the bottom, we spiked up and then we had this high low. So I was saying if we lose the high low, we're going down. Same here, this is the high low, higher than this low. If we lose this high low, we're going down and we lost it. So the same thing down here. And again, remember, I'm going to show you all the times the bears were in power down here, multiple occasions. If you appreciate me looking out for you and you've enjoyed this video so far, smash the like button, subscribe because we're trying to hit 3.4k subs as soon as possible. And yeah, of course, comment down below if you did find value, if you just enjoyed today's video, or if you're new to the channel. So over here, we have our low and a high. So I'm looking at the main moves. I'm not looking at all these little candles in between. That's a higher low. That's a higher high, higher low, higher high. Oh, higher low, higher high, higher low. And even now today, you've made that higher high. But let's just forget about today. Let's look at the main structures. So this is our bottom. This is our spike, right? We've come back down. We've found support right here. And over here, you see we got above the 20 and went back under it, invalidating the further upside. You were above it saying we should go up. You went back under it, invalidating that upside. So that means if we've invalidated the bullish scenario, then we should be bearish, because invalidating a bullish move, surely that's extremely bearish. When bearish means downtrend and downtrend means lower lows. So let's see a lower low. Did you make a lower low? No. So no, you weren't bearish, were you? You weren't truly bearish, because if you were, you went above the 20, which is bullish, breaking back under it. This is the continuation moving average. As long as you're below the 20, you should continue your trend. And if we're below it and we're using it as a resistance, that means we're in a downtrend. However, a downtrend means lower lows and lower highs. And although this was a fake out, which means that this is not bullish, this is bearish, we did not make a lower low lower than this low. We actually made a higher low over here. You see that wick is higher than this wick? That's a higher low. That's actually part of an uptrend structure. So that's why I constantly been telling you and berating the bears. We're in an uptrend. We're in an uptrend. Since the 18th of June, since November till the 18th of June, downtrend. Since the 18th of June, uptrend. How do we invalidate this uptrend? If you're here today and you're a bear and you've had enough this geezer Louis talking and you want to be right and you just want to prove this dickhead Louis wrong, then yeah, you need to break below 18.6k. And as long as you're above 18.6k, suck my knob, because we're not going down as long as we're above 18.6k. So as long as we're above that, we're not going down. If we're going below it, we're going down. So if we're not going below it, we're not going down. Simple as that. Literally little riddles for you. But literally just, it's a story, isn't it? So we have this low, this higher low. There's two lows here, one there, but we'll just look at it as one. Oh, don't know why it's not deleting that now. But then, yeah, got this next higher low. So if you want to see short-term bearishness, then obviously close back under this purple and the 69 and the purple, come back down to here, potentially forming this M pattern. I say potential because even if we come back down to here, it's not an M. It's only an M if you close a daily candle under this wick. The level is 22.4, but you should be just going in your chart anyway, and just like Louis said, that wick, and you just go over on your chart and you just search for what that level is. But then you need to break that neckline, close a daily candle below that if you want to see this M pattern validate. So without breaking below that wick, you don't have an M pattern, regardless of if you come down to hit, and that is one top and that is a second top. It's not considered an M pattern, guys, until you close below that. Once you close below, you have an M back down to here, and then the bears will say you've got an even larger. I'm telling you, you've got an even large M. One top, this being a neckline, this massive small double bottom top is going to become one massive one. So can you see that? And then only once you lose the neckline are you going down. So you can come to them, doesn't necessarily mean you're going to break them. And I'm going to show you that. Well, not show you, but I'm going to explain that, how you don't have to break them. So as I've just stated, to validate the pattern you need to break the neckline. So without breaking the neckline, the pattern was never valid. So if we came down to here, and yes, that looks like one top and two top, you could come back up and attack this and go higher, and then what was a double top has now become a double bottom. Can you see that? So this is why we always need to be careful, not jump to conclusions like you see all these bears, because the people that are saying, oh, the bottom is not in, the data is wrong. Remember this weekly indicator I showed you, the weekly 55 and the 69. This is what I'm going to leave you guys off with. So the 69 crossed over. The blue one is the 69. The orange is the 55 on the weekly time frame. So this means a lot, guys. So when this bearish cross happens, the bottom is in. I've spoken about this on the channel for a long time now. But if you're new, here you go. When this cross is over, the bottom was already in prior. So we need to go back to the past to see when this has happened in the past. And we can see over here, it's happened here in the 2018-19 bear market. And when this appeared, the bottom was already in prior. We have a higher low. And you can see here, just imagine at this point, guys. Just imagine at this point, all the bears would say, you've rejected the 200 weekly EMA. Bitcoin's never done that in its history. That is signaling that this is a downtrend, because that's what the 200 EMA signals. By its definition, is the trend indicator. And EMA is just better than the MA. And this is the weekly, so it's more valid than any little time frame. So even then, closing below that, confirming it as resistance, confirming this blue one, the 12 EMA, use the 10, I use the 12. And then also this candlestick, specific candlestick, is a shooting star at resistance. And not only that, we're in this downtrend with this lower high and lower high and lower high. But where is the lower low? Do you see the lower low? No. Is this low lower than that? No. So that is why we just continued up. So even though that was extremely bearish, and you did the most bearish thing ever, which was retest the 200 EMA as resistance, that was the first step. The second step is make the lower low. Did you make the lower low? No. So I would have been telling you down here at this bottom, while we were going up, even with this bearish candlestick, I say, yes, this is extremely bearish, this can go down, but you need that final confirmation, and that's losing this low. And if you don't lose this low, you're not bearish. And look what's happened, and look what happened afterwards. So you can see we just went straight into a bull market, and that's exactly what I'm telling you guys here. But you just don't want to hear it, do you? Well, some of you do, but some don't. So the same thing happened here. We go to the daily, we have our low. This is the higher low. If you're not going below this, it's up only, guys. If you're not going below this, up only, it's up only. But if you go below this, we're going down. It's the same thing as I just showed you in the 2018 bear market. If you appreciated that, let's get this video to 100 likes. Let's subscribe to get this to 3.4k. Leave a comment if you found value, if you're new, or if you just want to say something nice. If you're interested in the course, the mentorship, get the course. You don't need to wait for a mentorship spot. Get the course. Not enough of you get the course, and it's everything that you need to get kickstarted. If you want to do the mentorship after, finish the course. Have all your notes done. Have questions done. So when you start the mentorship, you're not wasting one session. So yeah, do the course first if you want. then do the mentorship. Thank you guys. I'll catch you in the next one. And again, head over to my Twitter, Louis_crypto. Thank you. Peace.